This week, regulators and institutions are converging in a way that we haven't seen before. From the Bank of England's opening consultation on systemic stablecoins to Japan's Megabanks preparing compliant yen tokens, while Ethereum's latest upgrade slashes tokenization costs. They're one signal that Bitcoin and RWAs are being absorbed into the core of global finance. The question remains, are you positioned for it? Well, this first article around Bank of England now opening itself for consultation on regulating stablecoins. Now, the BoE is preparing to license bank-backed and institutional issuers. It positions the UK alongside Japan and Singapore as a hub for institutional tokenized cash and collateral. A real TradeFi regulatory green light moment. So this is fitting because I always felt that the UK were anti-crypto. It has always lagged behind the rest of the forward-looking nations out there who have adopted an entirely different stance on embracing technology, embracing innovation in a way that would open up its economy and, more importantly, to open up new swathe of jobs for the youngsters, whether it's from an AI perspective and now blockchain. And I'm grateful that, being the Brit that I am, I'm seeing that the UK are slowly but surely starting to see some sense that they need to now embrace crypto and AI, and it's all heading in the right direction. This leads into another financial services news where Anchorage, which is a US crypto bank, is expanding its custody and yield services for tokenized Bitcoin. It's already trusted by BlackRock and Franklin Templeton for on-chain funds. The expansion makes Bitcoin itself a gateway into RWA. So again, this is very, very positive because we're starting to see the trend is very clear and it's undeniable that more institutions, the financial sector, even TradeFi, is now embracing Bitcoin and RWA at an increasing momentum that we have never seen before. So this in itself is historic, truly is historic. So it bridges Bitcoin as collateral with the RWA movement. It's credible, regulated, and tied to asset-backed, yield-bearing use cases. As I said before, as an investor, we need to be able to distinguish between the men and boys in the room, because when we make these investments, it needs to be in a way that it's regulated. Let's move on to another interesting news, which is happening now in Asia. Japan's financial regulator is backing MFUG, SMBC, and Mizuho to issue compliant yen stablecoins. The major banks are entering issuance, which brings RWAs into mainstream finance. Stablecoin liquidity will now underpin cross-border payments, treasury management, and indeed tokenized yen assets. So real asset adoption is even happening at a central bank level, not just on the commercial banks, those large financial institutions. It's now happening in the actual market infrastructure space. So as we're starting to see with the first few announcements that I just talked about, is more veered towards the financial services, TradeFi, adopting RWAs and an increasing momentum and using Bitcoin as collateral. So the Bitcoin as collateral will be the base layer, and the RWA token issuance will happen at the custody layer managed in those banks in order to capitalize the centuries worth of security infrastructure that is held in these large banking institutions, which is very, very comforting for investors like you and I, because we want to have that assurances that whenever we make those investments into those top RWA coin projects, we need to ensure ourselves we're going to be doing it with the best in breed players out there, which are the banks fundamentally. That's what we're seeing as a trend. Now, this next interesting topic around Ethereum has released a significant upgrade in its infrastructure. It's called the ZKSync Atlas upgrade, which will enable cheaper tokenization now on Ethereum. Atlas upgrade reduces transaction costs for tokenization. It's endorsed by Vitalik, the co-founder of Ethereum, as a scaling breakthrough. It makes Ethereum more viable for institutional RWA flows, such as in bonds, funds, and treasuries, without actually sacrificing security. Now, this is important because, as I explained in several of my videos, to make RWA tokenization happen, we need smart contracts. And the current leader by TVL, I've got a couple of interesting statistics, is Ethereum. Ethereum has $77 billion worth of total value locked in its ecosystem. And on second place is Solana. It has $10 billion of TVL. And trailing third is Bitcoin's layer 2 sidechains that have just opened up its smart contract programmability in its ecosystem, namely Stacks and some others as well. So they're trailing on third because they just have $7.5 billion of total value locked. So what I'm trying to say is Ethereum still remains the king of all smart contract blockchains out there. It remains, as I said, the programmable home for tokenized RWAs. This update keeps its infrastructure edge because one of its handicap of Ethereum, because I used to program Ethereum when I was creating one of the dApps myself a few years ago, it was very, very expensive, right? We're talking about $10, $20, $30 every time I upload a dApp in Ethereum. And I'm not even talking about the fees to actually run the dApp in Ethereum. Now, thanks to this news, it will make the Ethereum network more faster, cheaper than ever before, which I think is very iconic. So I had to give kudos to them. Now, this leads to a few other announcements. The US regulator, the CFTC, which is like the Commodities Trading Commission, acting chair Caroline Pham, is now exploring regulated spot crypto markets, its potential inclusion of tokenized commodities and stablecoins. This provides more assurances and credibility now, particularly drawing in much more capital than ever before when it comes to issuing these RWA coins, because we need to have that regulatory assurance layer underneath, which is clearly what we're seeing now from these announcements. The next one is again a continuation of this heap of good news, is around first spot XRP ETFs is close to being launched, driving institutional demand now heating up. ETF analysts expect the first spot XRP ETFs to be approved within a matter of weeks. Ripple's ongoing expansion with Mastercard and Hong Kong stablecoin initiatives shows XRP infrastructure now aligns with major TradeFi rails, with a regulated XRP ETF would be the next major bridge between crypto and capital markets, validating tokenized payments and cross-border settlement as investable real-world asset infrastructure. So I would see XRP playing side by side with stablecoins, because the XRP and stablecoins are really the settlement rails, drawing in the capital and wealth from TradeFi into the blockchain space. So clearly there is a huge market to be had. So if I were to sum up, it's all about increased momentum and push and drive now for bringing tokenized RWAs into the next level of adoption into the mainstream. There's an awful lot of interest now from large institutions using its corporate rail system to attract capital and use it as a base for tokenizing RWA coins, particularly to its institutional customers, but for retailers as well. So clearly that is huge. And if you were to augment that and pivot of the Bitcoin collateral base, well, clearly this is going to only strengthen the narrative to increase that level of adoption of Bitcoin and real assets into levels we have never seen before. So this is really truly going to set the stage for that golden moment now for drawing in more liquidity and capital and interest from those investors who were somewhat perhaps a little bit hesitant to make any moves in this space. So clearly there is undeniably no more excuses for anyone not to join the bandwagon. Why we are seeing this trend strengthening every single day, week and month. So interesting times ahead. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology and real world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family and colleagues. This channel aims to deliver insight, no noise and no hype. Subscribe now.